prep work. We've determined all of the reconciling items, so now we're ready to actually construct the bank reconciliation itself. Let's pull up a different form here, blank piece of paper. So with any report or form, we're going to want to put a heading. Now, and you can compare it to the prior bank rec, and I'm just going to copy this one for us, but you would have the name of the company, the title of what your report or financial statement is. For us, it's a bank reconciliation, and then the date. And it is May the 31st is this month's bank reconciliation that we're doing. Okay. Now, again, when you do bank reconciliations, there are two sections. There is the bank section and the company section. The bank section is where we put their balance and then adjust it for anything they don't yet have recorded that we have recorded. So we'll just put balance per bank. We'll keep it nice and simple, or balance per bank's records. Either way. Now come all the way over here. Now let's go back to the bank statement and see what they said their ending balance was for our account. They said that we had an ending balance of $2734.15. So that's what we're going to put in here. $2734.15. Okay. Sounds good. All right. Now we need to add any items. Well, let's look through the reconciling items and see if there's any additions. Now, where do we need to look for reconciling items for this section? It's the bank section. So 2734.15 already has everything in there that the bank knows about. So we don't want to look on the bank statement necessarily. We want to look at our records and see what we had highlighted that we did not find on the bank statement. So let's go back to our records. Everything in red we've got recorded, but they don't. So we need to include this. So we've got one deposit, and 4 checks that were not yet recorded by the bank. Well, will the deposits, will they add to that balance in our checking account or take away? And the same question for the checks. Will they add to that balance or will they deduct from it? Well, deposit should add to it. Checks should take away. All right. So we've got a $4,000 deposit we made on May the 30th. So let's put add deposit in transit 530. Excuse me. And I believe that was our only addition that we found. And now I've already forgotten the amount. Hang on, 4,000. There we go. So if that's our only item, I'm going to go ahead and put it all the way over here. We'll just put a little subtotal of our additions. If you had additional additions, multiple additions, you just make a list of them and have a column inserted here somewhere so you could get a total for them before you put it over in the right. What are we going to deduct? Now, we said we had those checks. We call those outstanding checks. And we know specific outstanding checks. So I want to write them down individually so that I know what check number, so I know when it clears. I don't just want to put an amount here because that wouldn't help me next month to determine if they really did clear the bank or the bank had recorded them. So I'm just going to copy. Let's see if I can copy and paste these for us. Make it a little easier. We're going to put all of those checks that have not cleared here. I tell you what, let's take these, put them over here a little bit. Wow, we've just got different, sorry, we got formatting issues. Okay, here we go. So there are all of our outstanding checks. Just give us a little space in between here. So I'll add those together and get a total. Okay, and those were all the items that I saw. Now, something else to look for. We didn't have it in our example. Errors. What if you notice that you had a check recorded for, say, that $48.15 right here, which obviously it's outstanding, but let's say when it clears the bank, it clears for $41.85. Well, the bank has it recorded for $41.85. You had it recorded for $48.15. Who made the error? You'll need to find out. You need to pull up a check image, for instance. Banks keep check images now and see if you made the error or they made the error. If you made the error, it needs to go in the company section. If they made the error, it needs to go in the bank section, and you need to notify them so that they can make that correction to your account. Again, depends on what the amount cleared for versus what you recorded it as to whether we would add it back or deduct it. If you had it recorded for $48.15 and it cleared on the bank for $41.85, and that was the correct amount, then you would add money back in on the company section because you recorded the check for more than it really was for and should have cleared and did clear. So again, that just depends on who made the error and whether it will increase or decrease your account. Excuse me. Okay, so important to look for errors. We didn't find any on this statement. Now that was it. That's all I see for additions and deductions for us on our reconciling items. So if I total this up, this gives me an adjusted balance of $34,354.55. Okay, well, let's do the company section and see if we come up with the same thing. So let's just say balance per company. All right, now our records indicated what was our ending balance. Oh, let's see. These were April 30. I don't know if I gave our ending balance. Hang on just a second and let me find it elsewhere. This is the company's balance. We go look in the ledger, and our cash says that on May the 31st, we have $15,119.40 as our ending balance. Okay, so now what we need to do is to figure out how to reconcile this difference. Is that the right amount? Hang on, let me go check it again. Pause for just a second. Was, maybe not really a big pause for you. I paused the video, but we're back. Yes, it's right, but I see an error, and that's why it looks so funny. This is not correct. Why is this not correct? Because I added, look, we have this subtotal. Outstanding checks or deductions. I didn't subtract. Everybody makes boo-boos, okay? So, we would have seen that there was a big problem when we get to the adjusted balance. They weren't correct. So now, balance per company. The company section is the place where we need to find out, all right, the $15,119.40 is everything we already know about. We have everything recorded. What items might we not know about? Well, those are items on the bank statement, items in the bank's records. So this is where we put items that the bank had recorded that we didn't. So we go to the bank statement, and the only item we had there was the bank service charge on the 31st. So, is that going to add or deduct to our balance? It should deduct. We don't have any additions, so we're just going to put deduct bank service charge. And it was, I believe, $5.95. So now we have an adjusted balance on this section of $15,113.75. Do we balance? Do we both have the same adjusted balance? Your goal is that the company section and the bank section, the adjusted balance totals should be the same. And they are. We have now reconciled the two sets of information. Anything that we show in the company section, we have to make a journal entry for. So, if we were in the journal, let's just assume I spaced down a few lines and I'm magically in the journal. We have one reconciling item listed in the company section. We don't make entries for those in the bank section because, remember, those are items we already have recorded that the bank does not. But items in the company section are items that the bank has recorded that we do not. So we need to record those because they really have happened as long as they're not incorrect or an error. And we take that into account in other ways. Okay, again, that would be not in our section. Everything in our section needs a journal entry. So a bank service charge. All right, that's an expense of the company. And I'm just going to call it bank service charge expense. And that's for $5.95. So we're going to debit it. Then we credit. What are we reconciling? Checking account, which is cash. So we deduct or credit cash for the $5.95. Now after I post this, instead of my cash balance being $15,119.40, it will now be $15,113.45, the adjusted balance from the bank reconciliation. Okay. Other items that you may see we don't have listed here would be things like an NSF. What is an NSF? Non or not sufficient funds. That would be when either we could kind of look at two NSF possibilities. If your customer's check bounced that you had deposited previously, and that's going to come back out of your account. Or if a check bounced that you wrote, sometimes you can see those as NSF charges, and you'll get fees associated with those if you bounce a check. Not necessarily so if a customer check bounces. They'll get a fee from their bank, but it will come back out of your account, and you'll need to recollect that. And if there is a fee associated with it, you'd want to collect the fee from that customer as well. The bank could, for instance, collect a loan for you and put it into your account and the interest associated with it. If you loan someone money and you had it set up through which the bank had collections for you, that would happen too. And then you would automatically see those deposits or other increases in your account for those types of items. There may be miscellaneous charges. There may be ACH, automated clearinghouse, or things like if you have ever done bill pay, type of electronic funds transfer, those would show up as well on your bank statement. You may or may not have those recorded, hopefully you do, but sometimes you'll also have electronic deposits that come in. So again, there's a lot of things to look for, but in general, you're looking for any items that are not recorded in both places. If they're not recorded on your records yet, and they are recorded on the bank's records, it needs to go in the company section. If you have them recorded already, but the bank does not, then it needs to go in the bank section. And everything in the company section has to have a journal entry.